the U.S. stock market faced a challenging start to 2025. The first quarter saw a decline, marking the worst start to a year since 2022. Several factors contributed to this downturn, creating uncertainty for investors. Rising inflation and interest rate hikes continued to weigh on the market. In addition, geopolitical tensions and slowing global growth added to investor anxiety. Despite the overall negative trend, certain sectors showed resilience. Healthcare and energy stocks performed relatively well, benefiting from strong demand and favorable industry dynamics. However, technology stocks, particularly those in the high-growth, high-valuation category, experienced significant losses. This decline reflected concerns about rising interest rates and potential regulation. Overall, the first quarter of 2025 served as a reminder of the stock market's inherent volatility. Investors were forced to navigate a complex landscape marked by economic uncertainty and geopolitical risks. As the year progresses, it remains to be seen how these factors will continue to shape market sentiment and performance. President Trump's surprise return to the political stage sent shockwaves through the market. His announcement of new tariffs on all imported goods, dubbed Liberation Day tariffs, injected a significant dose of uncertainty into an already volatile environment. The market reacted immediately with sharp swings in both directions as investors grappled with the potential ramifications of this unexpected policy shift. The tariffs, designed to protect American industries and reduce the trade deficit, raised concerns about retaliation from trading partners. Many economists warned of a potential trade war, which could disrupt global supply chains, increase prices for consumers, and ultimately harm economic growth. The business community expressed apprehension, fearing that the tariffs would increase costs and hinder their ability to compete in the global marketplace. The impact of the tariffs on the stock market was immediate and significant. Companies with exposure to international trade experienced sharp declines in their share prices as investors anticipated a negative impact on their earnings. The uncertainty surrounding the tariffs added to market volatility, making it difficult for investors to assess the long-term implications of this policy change. Major stock market indices reflected the turbulent first quarter of 2025. The Dow Jones Industrial Average, a bellwether for large-cap U.S. stocks, ended the quarter with a modest gain, masking the volatility experienced throughout the period. The S&P 500, a broader index representing a wider range of companies, also finished the quarter slightly higher, but not without enduring significant swings along the way. The Nasdaq Composite, heavily weighted towards technology companies, experienced the most significant decline among the major indices. This tech-heavy index, known for its growth-oriented companies, was particularly sensitive to rising interest rates and concerns about potential regulation. The decline in the Nasdaq highlighted the shift in investor sentiment away from growth stocks and towards more value-oriented investments. While the U.S. stock market grappled with uncertainty, global markets presented a mixed picture. European markets in particular showed signs of strength, with the German DAX index reaching record highs. This performance was driven by factors such as a weaker euro, which boosted exports and improving economic data from the region. Asian markets offered a more nuanced perspective. China's stock market, after a period of volatility, rebounded strongly, fueled by government stimulus measures and renewed optimism about the country's economic prospects. Japan's Nikkei index also posted gains, supported by a weak yen and accommodative monetary policy from the Bank of Japan. Overall, the global stock market landscape in the first quarter of 2025 was characterized by a divergence in performance. While some regions, such as Europe and parts of Asia, exhibited resilience, others, including the United States, faced headwinds from factors such as trade tensions, rising interest rates, and geopolitical uncertainty.